The days of home ownership might be a thing of the past. You came here for the truth, so let me unveil that for you. Today I want to talk primarily about real estate, and I think it's really important to see what's been happening underlying all of this information that we've been showing on the channel throughout this period. Obviously, you've been seeing a lot of people moving in from the big cities into the suburbs, into the rural areas, and so on. I also want to cover inflation. Inflation is a real key statistic, but if you're looking at the official rate of inflation, you're not going to see the truth. That's why you're here. Let's get into it right away. A really interesting article out of Wall Street Journal gets into all of the details. I will try to touch on as many points as I can. The title is, "If you sell a house these days, the buyer might be a pension fund. Yield-chasing investors are snapping up single-family houses, competing with ordinary Americans and driving up the prices." Isn't that funny how it works? Or you've got the institutional money that has been buying up single-family homes. We're not talking about office towers that are 50 stories. We're talking about single-family homes, and then they rent them out to people. So if you go down in the article, I won't have time to cover it all. It's actually got a lot of detail. But essentially just showing you here, in this particular example, D.R. Horton built 128 houses in Conroe, Texas, rented them out, and put the whole community on the block. A who's who of investors and home rental firms flocked to the sale. The winning $32 million bid came from an online property investing platform, Fundrise LLC, which manages more than $1 billion on behalf of 150,000 individuals. So it's the money coming in, being pooled together and leveraged to the absolute maximum, and then, of course, renting these out to the people. The country's most prolific home builder booked roughly twice what it typically makes selling houses to the middle class, an encouraging debut in the business of selling entire neighborhoods to investors. We certainly wouldn't expect every single family community we sell at a 50% gross margin. And basically just goes into more of those details there. You now have permanent capital competing with young people trying to buy a house. And this is something that I covered in the previous video to this one, which was with Steve Saretsky of the Saretsky Report. It was a horribly performing video, but it was a fantastic one, if I may say so myself, because we get into these issues. What's happening here? You've got foreign investors. You've got institutional money. These issues need to be discussed. But if you see the views that I got on that, a lot of people aren't interested. A lot of people aren't interested in that, and it's really sad. So looking at this here, as it shows you, it's going to make U.S. housing permanently more expensive. Of course, if you look at this, with interest rates low, all of this, everything that I talk about here on this channel, it's all because of the actions of the central banks. People want to point to inflation and deflation. They want to look at what's happening with this sector or that sector. Oh no, GPS. It's the Internet of Things. It's 5G. It's AI. These are the industries that are going to change everything. You need to understand the basic premise. If interest rates are rock bottom, you are going to have markets that accelerate beyond the mean and go beyond and beyond into the stratosphere. But if interest rates are just moderately higher, not 20%, not looking at what happened in 1980, just moderately higher, everything changes. And you might say, well, they just won't increase the interest rates. If they know they're going to crash the market, why would they increase interest rates? It's because if inflation picks up, they don't have a choice. Simple matter of fact. Limited housing supply, low rates, a global reach for yield, and what we are calling the institutionalization of real estate investors has set the stage for another speculative, investor-driven home price bubble. That's the kind of information that we need to be discussing. Along with that article here, there's this Twitter thread that I was looking at and essentially just made a couple points. BlackRock, among others, by the way, not just BlackRock, is buying every single family house they can, paying 20 to 50% above the asking price and outbidding normal home buyers. Why are corporations, pension funds, and property investment groups buying entire neighborhoods out from under the middle class? Let's take a look. Home prices are popping up on the MLS, going under contract within a few hours. BlackRock, among others, are buying thousands of new homes and entire neighborhoods. So this right here is being done all over the place in the US, it seems, of course. And I really am going to investigate this further to find out if this is happening in other places around the world as well. If you happen to know of these examples, put them in the comment section, please, or you can contact me if you're one of the insiders. If you're part of the insiders, contact me directly. Let's investigate this further, okay? Unlike other channels out there, I saw one, I almost cursed one individual out there, another channel who tells people the certain price of a stock into the future, telling people, buy this stock, it's going to be at this price by this date. These very disingenuous people that sell them a dream constantly. Anyway, point being, this is a grassroots channel. You and I need to figure this thing out together, okay? They're going to tell you what you want to hear. I'm here to give you the truth. Who is BlackRock? It's one of the world's largest asset managers, the leading proponent of the Great Reset. That's the reason I read this. Kept that for you there. The Great Reset. We know about this. The comments, I see the comments all the time. You will own nothing and be happy. You remember that. Always remember that. Now, in addition to BlackRock, in addition to these other companies, you've got Blackstone. Now, Blackstone is part of this. I'm going to show you one piece. If you want to know what's going on with Blackstone, read this article out of Fortune. It gets into everything. More recently, Blackstone has been luring retail investors for the first time and in a big way. The second pillar of the Core Plus is Blackstone's real estate investment trust. It launched in 2017 to target the mass affluent. It's a real estate investment trust where shares are held by investors, but those shares aren't traded. BREIT doesn't buy fixer-uppers. 3/4 of its $46 billion portfolio of almost 1,400 properties comprises warehouses and suburban apartments. So you got to understand what's happening. The institutional money is in all of these different plays. Like I said, you might have a 50-story tower, and you would expect that to be institutions. Others are now getting to the single-family game. Well, it's been there for a while, but certainly it has really been escalating. Now, this one particular company is seemingly getting into all of these different games right now. They're touching on everything, okay? They're trying to pull money from all different directions. If you want to know about Blackstone, I would highly recommend checking this link out in the description. Okay, inflation. Big topic, obviously. I keep hearing about transitory, it's temporary, you don't know what you're talking about, all this stuff. But you can see this article out of Business Insider. The Fed says that inflation is transitory, but these 10 companies have already said that they'll pass along rising costs to customers. Now, who are these companies? Let's look quickly through it. I'm not going to cover all the examples, but I want to show you the names because you're going to recognize these. Campbell Soup, J.M. Smucker, Stanley Black & Decker, Whirlpool, Kimberly-Clark, Honeywell, the Clorox Company, Procter & Gamble, Coca-Cola, Reynolds Consumer Products, okay? All of these companies, these are major conglomerates. If you see some of these things like Procter & Gamble, they got everything under their belt. I mean, there's all kinds of different smaller companies within them. It's difficult to avoid this list of companies, okay? When you're buying household items, you could potentially like a Coca-Cola, certainly you can, but they even own some of the bottled water companies. It's all these different things. So you have to understand what's happening here. These companies are going to raise their prices, and they've already done so. So that right there tells you that you can't really avoid this. The inflation is here to stay. The companies decrease their. Have you ever seen a company decrease their prices? Not very often. So, that's just one thing. I just want to show you the names of the actual companies, give you the actual data itself, okay? Because just telling you that prices, people just make up these things. Oh, price is going to go up. That stock is going to go up. Oh, that thing is going to go up. And certainly over time with the devaluation of currencies, things do move up. But isn't it better to actually have that real information? Well, that's not what the general public really wants, I guess. The general public, they love to be lied to. Before I get into the other details here, we're going to talk about lumber and so on. I want to cover the money GPS insights. Number one, it's important to understand right here, right now, that these mega corporations are buying up real estate and lots of it. Number two, the chance of actually owning a home has declined and is continuing to decline over the next little while as more money pumps in, the prices go up. Young people, the first-time home buyers simply may not have a chance. And then number three, as an investor, if you want to keep that investor mindset on right now, structurally, you look at this, I personally believe that multifamily residences, multifamily properties are the most stable going forward. The institutional money is going in, and you could see what's happening. We are becoming renter nations. That's very clear. People either don't want to be bothered by owning a home, they don't want any of that, or they are simply priced out, and as a result, renting places that are in these multifamily residences, maybe it's 200 units, 300 units, or even smaller ones, are becoming more sought after as a result of all this, because people can pay $1,500, maybe at most $2,000 at a high-end place, and they can get all the facilities that they really can't get in other areas. And this is becoming more and more prevalent, and probably will as time goes on. Lumber prices post the biggest ever weekly drop with buyers bulking. You could see what's been happening here. This is the chart, just basically trying to show you, never seen anything like this. This chart goes back to the, I believe, early 90s, and it's just all the way through. Haven't seen anything like this before. If you want to know the real rate of inflation, don't bother with the CPI. This article talks about that and why you should not ever focus on what the CPI does. Why? Because it's been changed, and it keeps getting changed, and it keeps getting changed over and over again. And you look at this here, happens to be from Shadow Stats. They recalculate their way of doing the numbers. Okay, they've got inflation stats, they've got the employment stats, they've got everything. And basically John Williams recalculates it in different ways, by the way. One of them happens to be back from 1980. One of them happens to be back from 1990. Imagine, this isn't his own way of doing things. He's calculating it the way they used to. Okay, their own way, the way they used to, and the numbers look so different, okay? So at the bottom is the 1980 based numbers, and you're looking at, what is that, 13% or so? 13% on consumer inflation. What about 1990 base? Okay, you thought that was too crazy? 1990 base, it's about 9%, just maybe 8.5%. These figures don't ever show us reality. And I think it's really dependent on where you live and, if you have children, what your family situation looks like, and a whole host of factors that will determine your rate of inflation. Okay? This right here is the commodity indexes, and despite what you could see with lumber price coming down and so on, they've still been performing very well from the beginning of 2021. This is just showing you, again, broken down into the different metals and livestock and energy, and obviously precious metals performing poorly. It is the most manipulated of all. And, I unfortunately don't have time to get into this. There is a lot here, and I will just have to touch on it in a different video. This one is something really key. We're talking about the central bank digital currencies, talking about a lot more. Look, if you want to know something, you've got to get to the source. That's what this channel is all about. But I also need to get to you. Every day, 5 days a week, I can email you the daily video. And why would I do that? Because the algorithm does not show you my videos. The algorithm often unsubscribes you. The algorithm decides what you want to see. Now, if you like, Jimmy Fallon and Jimmy Kimmel and whoever, that's fine because that's what they're going to put up front. They might show you a kitten video or two, but ultimately they're not going to show you the Money GPS. So if you want to get the Money GPS, sign up to the Insiders. It's free. It's my email. It's available at themoneygps.com. If you found the video informative, hit that thumbs up button. I appreciate it very much. And if you haven't seen this video, you've got to watch it. Steve Saretsky and the Money GPS together. Check it out. I'll see you there.